sitting a tight supply side, while the demand side tends to increase and remain tight as well. In this report, we aim to shed light on the factors driving WTI's price and assets future outlook. We make a start, as usual, with the data for the US oil market, with the US weekly crude oil inventories. The US weekly crude oil inventories figure, which was released during yesterday's American session, was indicating of a reduction in the US oil inventories, with the actual figure coming in at minus 2.170 million barrels, compared to the expected figure of minus 1.320 million barrels. The higher than expected reduction in the inventories combined the OPEC Plus production cuts being extended until the end of the year, appear to be forming a long-term view of elevated oil prices. Furthermore, the organization foresees a supply shortfall of 3.3 million barrels per day in Q4 of 2023, which could strain the supply of oil into the markets. Therefore, as demand remains elevated and supply could potentially become constrained, we may see the price of oil moving higher. In addition, the US Strategic Petroleum Reserve is near all-time lows, with the current inventories nearing level last seen in 1983. As such, the lack of crude oil in the SPR could weaken the ability of the US government to push oil prices lower, which could allow the price of oil to move higher, as there be reduced opposition from the US. In conclusion, we may see the price of oil elevated, yet still maintain our concern about external factors that may influence the price of oil. Earlier on today, the Kremlin stated that the Russian government will be sticking to their agreements with OPEC Plus to reduce their oil productions up until the end of the year. The statement comes a day after Bloomberg reported that Russia was potentially using shadow tankers in an attempt to bypass European sanctions on Russian oil. According to the report, the tankers were spoofing their location in an attempt to conceal their identity and as such concealing the origin of the tanker and of the liquid gold, which may potentially allow Russia to increase the supply of oil, while stating in public that it would uphold its agreement with OPEC+. As such, in the event that reports surface that Russia has not been upholding at the end of the deal and instead of reducing oil supply has been increasing supply and has been using shadow tankers, we may see the price of oil moving lower. However, we do highlight that despite the report by Bloomberg, it appears the price of oil remains unerved and as such may not face any significant influence on its price. In conclusion, although the allegations of Russia evading sanctions using shadow tankers could in theory weigh on the price of oil, until concrete evidence emerged that Russia may not be unholding in terms with OPEC+, then we may see no impact on the price of oil. On the other hand, should concrete evidence emerge that Russia may not be upholding their agreement of reducing oil production, then we may see oil moving towards lower ground. Thank you for watching.